A year ago I made 10 stock predictions and today I'm holding myself accountable while sharing the stock peak returns. Out of 10 predictions I only bought 3, 6 of them were too expensive for me and for one I said you should avoid. But let's kick things off in chronological order, starting with Archer Daniels Midland Company. Back in December of 2024, when analysis was made, it was trading at just over $50, and I was willing to buy it if it drops below it. Price-wise, stock dropped all the way to 41 in April of 2025. While it was dropping, I dollar cost average into it, with the money I set aside for ATM. Currently, my average stock price is at $46.74, which means my return is sitting roughly at 72%, which is a market-beating return by more than 30% if we compare this to S&P 500, adding a 4% dividend yield at my entry price, and this one is a solid hold for me. Next up is Dollar General, which was also done in December of 2024. At the time of the recording, stock traded at $75, with a target buy price of $70. The stock did reach that target in January of 2025, hitting a low of 66.40 cents, but I hesitated and missed the entry for this one. Today, Dollar General sits at 114, which means anyone who bought it below 75 is up at least 35%, which is beating S&P by 10%. Not a spectacular return, but a solid one, and that's before counting in dividends. Next up is another store company, Target Corporation. At the time of recording, Target was trading at 139, which was too expensive for me. My buy price was set at 100, and it fell to it. It fell all the way down to 83 in November of 2025. My average entry price was at just 96. Today, Target sits at 129. That means if you bought at video date release, you'd actually be down nearly 13%. A good reminder that paying the right price matters. My personal return on this one is 0, as I sold it at a slight loss, not because the thesis was wrong, but because I found a better allocation of my capital, and it also made sense tax-wise to liquidate it. If that wasn't the case, I would still be holding it today. Next up is Nike, and this one is a complete disaster. Nike was at 72 at the time of the recording, but my buy price was $52.50, and yes, it reached that level, but I completely misjudged the depth of the turnaround. The struggles keep compounding, new lows keep coming, and today the stock is sitting at just around $42. That's a 42% drop from the video date, and even if you would have followed my buying price, the return would still be a negative 20%. So this call was completely wrong. Next up is Celsius Holdings. This analysis was made just 14 days before the Alani announcements that catapulted the stock from $22 all the way to $65. Since then, it retracted back to around $30 mark. If you would have bought it at the time of video release, then you would have made 37%. This stock, I believe, will remain volatile and has tremendous potential, but you have to be cautious at which price to buy it. Maybe I should revise this buying price as $10 seems a bit low. If you find these kinds of videos useful, consider liking and subscribing as it means a lot. Thank you. Next up is again ATM. This was a revised call in February of 2025. After building the position size I wanted, I reconsidered how much further Archer Daniels could fall. Especially given its disconnect from food index trends, it seems as a very good investment, but there were some pain points to be addressed by management. That is why I also revised my personal buy price target to $40, though the stock never reached that level. Still, I was satisfied with my overall position. So let's move on to e.l.f. Beauty. In this case, I stated that I would not personally buy the company, because the Muddy Water Research report raised concerns about possible fraudulent activities. That creates a major headwinds for the stock, and with so many other opportunities available, I did not think the risk was worth taking. Although the stock initially surged, reaching highs of around 150, it later retracted significantly to about $56 as of now. This means that if you had bought the stock at around $73, the price at the time I recorded the video, you would be now down nearly 23%. Overall, I believe this was the correct call, and notably it was the only stock I explicitly said not to buy it. Next one is Applied Materials. This stock has been my biggest winner so far. At the time I recorded the video, the stock was trading at around $150, and I set my buy target at $125. The stock eventually fell to a low of about $123, which allowed me to buy shares at an average price of around $124. As a result, my return on this investment is now nearly 250%. With this position, I am outperforming the S&P 500 by roughly 200%. I still own this stock and plan to continue holding it for the foreseeable future. The next company is ASML, another major player in the semiconductor industry. At the time I recorded the video, the stock was trading at around $730, and I set my personal buy target at $500. The stock came very close to that level, but I never had the opportunity to buy shares. As you would about to see, ASML ended up delivering the weakest return of all the semiconductor industry stocks we looked at. Two more are coming up, starting with KLA Corporation. I set my buy target at $350, which was intentionally conservative because I already owned Applied Materials at that time. Since I already had exposure to the industry, I was only interested in buying KLA at a significantly lower valuation. When I recorded the video, KLA was trading around $670. The stock only declined by about 10% afterwards, reaching a low of $607. At today's price, buying at the time of the video would have resulted in roughly 170% return, so I would call this a missed opportunity. The final stock in the semiconductor industry was Lam Research, which turned out to be the best performer of all the companies discussed. If you would have bought the stock at the time of the video release, your return today would be close to 300%. At the time of the recording, Lam Research was trading around $71, and I set my personal buy target at $50. However, the lowest the stock fell afterwards was around $68, so I never had the chance to buy it. Even so, it ended up being the biggest winner among all the stocks we reviewed, with gains approaching 300%. Now let's make a quick overview of overall performance. The blue line represents returns from the video release date. As we can see, with the exception of 3 stocks, which are Nike, e.l.f. Beauty and Target, every stock would currently be showing a positive return. Of course, this is partially expected given the strong overall market performance. The best possible return is represented by the red line. Out of all the stock analyzed, I still currently hold only 2 positions. Archer Daniels, which currently sits at 72% return, and Applied Materials, which is actually the second best performer overall, with unrealized gains approaching 250%. We can also look at returns based on the buy price targets. Both lines remain the same, but the stars represents if you would have bought the stock per recommended buy price. Applied Materials is once again the strongest performer, with returns close to 250%, followed by Archer Daniels at roughly 60%, given the first video buy price was set at $50. Dollar General and Target follow with gains of around 46 and 21%, while Nike is the only stock showing a negative return of about 20%. Another interesting observation is that when comparing against the S&P 500 in green, 3 stocks would have outperformed the broader market if bought at recommended prices, this being Dollar General, Archer Daniels, and Applied Materials, while Target would lag S&P 500 by roughly 1%. It's also important to note that the dividends are not included in these calculations, and that is essentially the full overview. I hope you found this video useful and enjoyable. If you did, consider subscribing, as I am building a series of videos of how I analyze the stocks we discussed. You can already watch the first video over here. Enjoy, and I'll see you next time. Bye bye.